and good morning, everybody. Welcome to the eXp Industrial Committee Live. Once a month, we love to bring you interviews with somebody out in the industry actually doing it, actually practicing what we're learning about and what we're preaching here. And we couldn't be more excited. Today, we're bringing you Michael O'Mara, who is actually on the Triple Net Leasing Committee. So we're merging these two committees together for a really interesting and relevant conversation about triple net leasing in the industrial space. We're really excited to bring him. So, Michael, if you're out there and you could unmute yourself, we would love to get a little bit of your history, your background.
Sure. Yeah. Thank you, Pamela and Jabin. And shout out to your industrial committee when I was talking behind the scenes about doing something along the lines of what you have formed here for the Net Lease Council. I was directed over to Jabin, so he kind of gave me your playbook, and it really kind of helped accelerate our efforts. We just had our second call, and so it's exciting. It's a work in progress, but I just see so much growth here at eXp Commercial, and I feel like it's a perfect time. And I also see some familiar faces here, so hello to everybody. Just to kind of set the stage then, although this is industrial, the vast majority of my career has been in retail real estate, and there are industrial distribution hubs that I've become familiar with over the years. I started on the corporate side for about a dozen years, working for retail real estate companies up here out of New England. The one name you probably all recognize would be Staples, where I did site selection and development for them around the country. And then, I'm going to date myself. Back in 1999. It was an interesting time because, there was a lot of Wild Wild West brokers out there. And frankly, they were making more money than I was, and I was doing all the work for them. So I got invited to join the dark side with CB Richard Ellis when they formed a net with a retail real estate practice, and that was 1999, 2000. And then I started there doing tenant rep, landlord work, and stumbled into a very large 1031 exchange, which led me into the net lease arena. And at that time, CB Richard Ellis formed their national net lease group. And I just said, all right, this is where I'm going to go in my business. So I pivoted into this business. I consider myself, an expert in this space, but I would say, I was a generalist. I did a lot of different things out there, and it's helped me across my career, especially when you're going in these types of cycles that we're in right now. So fast forward, I've been in the net lease space, over 25 years. I did take a little gap here as I pivoted right before the pandemic into the opportunity zone space, which I still continue to do. I've been with eXp about 2 years now. The first year, I was just more of kind of a voyeur, just kind of trying to study the company and the group and really seeing what was happening. And then, as the market started to shift, I really started to size up the landscape. I lived through, survived actually would be a better way to say it, through the great financial recession. Lots of hard lessons there. But my first inclination was, there's going to be a lot of distress coming down the pipeline. That really hasn't materialized yet. But obviously sales volume is really off right now, and I expect we'll see some distress. So last year, that's when I started to really kind of ramp up to, dive in here with eXp Commercial. And I brought in a 10X to kind of do a presentation on how to use that platform to sell real estate. A lot of people think it's just for distressed real estate, but more and more companies are using to sell, typical cash flowing assets. So that might be something that you'd want to look at in your industrial sector. And that's when I had a personal introduction with James Hong, and we got to be talking about my background, and he invited me to kind of launch this net lease council that we just formed. And so, it's a little long-winded, but I like to paint the story and set the conversation up. So that's kind of my background for today, at least.
I absolutely love that. Hold on one second. We've got a mic to mute. I absolutely love that. And I love how you kind of like pieced it all together, because I think a lot of people experience that, especially in the, starting their real estate career, is that sometimes we fall into areas um by accident, if you will, you know.
Mhm.
But it's so important to specialize, and we do talk about that a lot. And it seems like you have definitely found a niche. And what we also love about that, we love to preach that specializing is so important, because when you work in a bigger market and you try to be a generalist, it's almost like you can be good at a lot of things, but can you ever be really great at something, like to really understand an industrial asset class with all the different nuances that industrial carries, whether it's logistics, manufacturing, so on and so forth, to really understand triple net leasing,
Mm.
to understand how to underwrite those properties and those leases. Those are special skill sets that take a long time to hone, you know?
I would
So
agree with that. Yeah.
yeah, 100%. So with that, what we're going to do is I'm going to turn it over to my fearless partner, Jabin, and he's going to be our moderator today. And he has got some great questions for you. And we're just going to dig into your mind for a little bit here.
Perfect.
Beautiful. Thanks, Pam. So, yeah, Michael, we've got a completely wide spectrum of different skill sets and levels, right? And everybody from rookie, don't even know what they're doing yet, to seasoned vets. And so I want to try to make this as engaging for everybody as possible. To start out, I would love for you to kind of walk through when you talk about being in the net space and doing 1031s and looking at investment real estate in the industrial space specifically. What key factors make an attractive industrial real estate investment? I would love to hear your thoughts on that.
Yeah,
What are
that's
you
a great.
analyzing?
Yeah, that's a great question. I would like to add, when people hear net lease, that can be, it's language that is used in almost every real estate transaction as part of your lease, right? And retail specifically, the asset class that I focus on was single tenant. And so by definition, single tenant is triple net, most likely double net. You don't see a lot of gross leases here. So I just want to say is that, you can be a generalist, but the important part is to really understand the mechanics of the lease, right? Because what defines a triple net versus a double net, a gross? What are the triggers in a lease that could affect your investment decisions? So I just want to kind of throw that out there. Being specific to industrial, I think one of the things that really caught my attention when I was with the retail industry is, where those goods come from, right? They're coming from a warehouse. They're being shipped in. These warehouses are being sited, in geographic areas to get to the distribution of the store network. So I had a pretty good grasp on that. And so everything, it comes down to picking the right site. There's a lot of factors, to go into site selection. Your roads, infrastructure, your utility infrastructure, the correct zoning. I think a lot of those things you could speak better to it than I can, but fundamentally, what I've learned in retail, really kind of the same concepts and principles apply to industrial real estate. You want to have good real estate at the end of the day, especially when you're underwriting this. Well, what's the risk of this? What's going to happen on my exit, or when this space comes back to me, if this tenant ever leaves, or God forbid, Rite Aid that just filed bankrupt and they got big industrial warehouses, or what is the trucking company that just filed for bankruptcy, right? So you always want to try to underwrite your real estate, and the demographics and the factors to specifically
Mm-hmm.
industrial are very important.
Yeah. And or go ahead, Pam.
I'm sorry, I have to jump in here. I can't even stand.
Yes.
I love this conversation so much, because listen, we've been operating in an economy where basically money is free, right? So real estate, I don't want to say real estate has been easy, because fundamentally real estate is a messy proposition. Any type of transaction, there's no two transactions that are ever the same. The nuances between, investor needs, property situations. Everything is always constantly different. But Michael, I kind of heard you say in there in a very delicate way that you think it's more important now than, let's say, the last 10, 15 years to really hone your skills as a real estate professional. Did I hear you softly say that?
Softly, yeah. I'm shouting from the rooftops. You just hit the nail on the head. Easy money. There's a lot of people that make big mistakes, but you just don't see them till they come down the road, right? Whether a lease is up for renewal, or the terms burnt off, or you pick the wrong tenant. And you get into really macro and micro issues, right? As far as where it's become so sophisticated as far as how you select real estate now. So there's a lot of tools, but it doesn't prevent people from making the wrong decisions if they're not informed with the zoning or other issues that might be affecting infrastructure. And the key is, if you're going to have a manufacturer distribution, is you're bringing in your inventory, your product, or whatever you're building, and how do you get it out to where's that supply going to go to, right? And markets shift, as you know, especially in the Sun Belt and out in Vegas. These markets start to expand, and with the advent of e-commerce and how that's evolutionized industrial real estate from Amazon and the FedEx deals and stuff like that. So, there's always risk. It's just, how do you minimize that risk, right? And the more educated you are in your craft, the better off you are for you and your clients.
And Michael, to hit on that, credit worthiness, right? We talk about that all the time, evaluating. How do you even go about evaluating the credit worthiness of a tenant? And I think when things are exploding and everybody's making money and it's easy, like Pam said, I almost feel like the evaluation process of risk, the risk profile of a tenant or a corporation, has not been taken into consideration as drastically as it's going to in the future. Because, again, to your point, you've got these massive corporations that are consolidating, lease buyouts, terminations, just all over the place, which is affecting landlords and investors greatly. And they might not have really expected something like that to happen, right? When you're looking at these types of tenants, how are you going about evaluating them? And what kind of considerations are you making to really kind of peel back the layers of, oh, no, it's not, don't just look at the brand and who they are, but what are you pulling back? What layers are you pulling back to analyze the true credit worthiness of a tenant, especially going into this interesting time period?
Yeah, that's a great question, and you could probably have multiple Zooms just on that question. I think there's a couple things, right? Is you have private credit and you have public credit, right? And everybody wants the public credit. That's where you're going to get the most debt financing. There's a vehicle out there called CTL financing, credit tenant lease financing, that is utilized for credit tenant leases, that have investment grade ratings. So, there are much more sophisticated investment platforms out there that have analysts and underwrite all this kind of stuff. I mean, for me, I'm more of the Joe broker. I'm going to look at the credit of the tenant, but a lot of these deals are private credit, right? And so there's greater risk with that, and that's where you get a premium in your, a gap or delta from how you price and underwrite these. So, if you're talking a private credit, let's just say a regional company out there, maybe you're familiar with, is, you really need to, you don't have as much public information. So, you have to get financials from companies so you can really underwrite to see what's happening with their cash flow, debt service covenants, other metrics out there. Because at the end of the day, if you're a developer, you're going to the bank to get your construction financing, and you're trying to underwrite what your exit is, and your lease term, your cost of capital. So there's a lot of different things that go into both. But if you're a credit tenant, a public traded company, that's much easier to gather that information. And I'll use Amazon. It's like, listen, everyone thinks Amazon's bulletproof. But if you've got a facility that's 10 years old now, and their business model has changed and their leases coming up, and they overpaid for that deal back in those days because they wanted that location. And now you've got, you got a refinancing coming up in a shorter term. You're most likely going to be looking for additional equity, or, maybe you can't refinance it. So then they close these locations on you too. They're still obligated by the lease. Well, that causes problems down the road if you're trying to exit. What is your exit? Merchant developers, their game is to build these and sell them and recycle the capital. 1031 exchange investors are looking to, preserve capital by trading into these deals, and they usually pay a premium. So there's a lot that goes into it. And, it's a science and an art too. It's like, all right, you might be willing to pay up for it because it's below market rent. It's a great location, and, you feel comfortable that you can lease it for a higher cost per square foot, or there's going to be other factors that are going to keep the pressure on this particular location. So that's when you get into, doing your site selection, your analysis of the market. So I think that's a long-winded answer. I don't know if I gave you an answer, but, kind of trying to like get into private and public. And I mean, there's a lot of small industrial buildings that are owned by contractors, right? You're just going to get in and underwrite the real estate. What's the cost to build that? And, and just hopefully not put too much leverage on, which most people did this last run up.
Oh yeah, no, I'm interested to see how the next couple of years are going to shake out. We're going to have a lot of, you circling back on. I tell my team all the time, I'm like, hey, listen, all these people that you called a few years ago that were, not about it, just we'll start giving them a little follow-up call and see how they're doing when those maturities come up.
This is the time to be staying in touch with people that you might have spoken to 2 or 3 years ago. You just never know, right?
Mike, one thing we had chatted about offline prior to was, when you talk about getting into the net leasing space, and specifically within industrial, what are some of the ways that brokers that are maybe looking to tap into that niche can do? Obviously, you have your council, your net lease council, which we encourage anybody on here that's interested in net leasing. Please connect with Mike. He's an amazing resource. But what are some of the ways that brokers could transition into niching in with net leasing?
Yeah, I think there's no real barriers. It's just, the experience and trying to work on your craft. So I got into retail because of my corporate background. That was just a natural progression to become a retail real estate broker. So whatever your backgrounds are to get into industrial, it's the same idea, right? It's all right. So, I'm an industrial broker. So the first thing, you're going to do is you're going to go and understand your own market, right? And, where are these business parks? Who are the developers? What are the characteristics that I've talked about as far as what's driving this hub? Why is it an industrial hub? Like Vegas is a great example because of everything that's happening out there, right? You're in the Carolinas, right? Same thing. I mean, but obviously there's a lot of brokers that are in smaller secondary markets. So they might not be this traditional net lease marketplace, but there's obviously industrial hubs. So go into those hubs, understand where these trade areas are, understand the owners, the developers, the tenants. I love following, I do a lot of research and set up Google works about different tenants and even the brokers. And you gotta put in the work to, kind of hone your skills and your craft. It's not a, if you get part of a team and, which is not really how we're designed yet, where you can work under someone that's, been in the space and cut your teeth that way. But a lot of folks here is they're trying to like learn, find their lane and, have an interest. Why do you want to, be in a specific asset type? Today you might not want to be in an office broker, but back in the days it was pretty lucrative.
Hey, Mike, I want to ask you a question about that. You said to set up Google Words. Now,
Yeah.
that's something that I found years ago that has exponentially helped my keeping educated in my craft and my area niche. So are you talking about like I go onto Google and I set up searches for certain keywords, right?
Yep. Yep.
So for me, instead of reading every commercial real estate article or economic article that comes across my desk, because I just can't, we are
Yeah.
bombarded with so much information every single day. I've set up Google key searches so that whenever articles, whether it be like in the news or just written by, somebody in our field, hits Google, it alerts me, hey, here's an article you might want to read. Is that what you're talking about?
Yes, yeah. So I get alerts. I have a net lease alert, a retail bankruptcy alert. So I'll just, I get them to
Hmm.
pop up. I'll look at them. If I see anything, great. If not, I'll just delete them. It's just a one tool
Yeah.
I like try to, with technology, it's just so easy to kind of become a resource. And you can set up those alerts right down to your own market, right? You made me think about something though, as far as the industrial space. I'll give you, I think, a pretty good example. Is like, so what are the top three air carriers out there? It's UPS, FedEx, and DHL, right? So, go map those three, right? Where's the gap? Who's expanding? Then try and find out the corporate contacts. They most likely already have a broker, but maybe you can become a broker for one of these types of tenants because you've got a specific location. Like if you got a listing, you're going to do a gap analysis of like what's missing here, or what are some synergies that would feed off of these other users or tenants. It's like, all right, if it's UPS, well, what else? What goes around with the UPS? You'd be surprised if you go into some of these parks, and I name those three because those are three of the top in their sector as far as industrial net lease assets that you see for sale that are pretty good, secure 1031 exchange replacement property. So to kind of
Hmm.
bring it into industrial net lease, that would be, I think, a great way for people to kind of educate themselves about trying to, understand a category, right?
Sure, sure, absolutely. And one thing that I've always loved doing with guests too is, what are some of these success stories that you've had personally that you could share within the net lease space where you've been able to help these people achieve, significant returns on net lease deals? Maybe some case studies, some stories that come to mind of you taking somebody that had a problem, being able to provide them with a solution in the net lease space, and maybe a story that stands out to you, or some challenges that you've ran into that you're able to overcome on some interesting deals that you've worked on, just to kind of share some of the stories with our guests here.
Yeah, so I think it's relative to where we are in the market, right? When
Hmm.
it was a really hot, frothy market, the key is to have the listing, right? And usually you had competitive bids coming in from 1031 exchange buyers. Today, I think that pendulum has shifted dramatically, and so you know
100%.
I believe you're better served working with, motivated buyers that have dry powder, right? And then try to go maybe back to some of these people you just referenced that they weren't sellers then, but you might be surprised if they're sellers today. So, you're trying to fill a gap. Where's the pain? When the great financial recession and Walgreens and CVS, not so much Rite Aid, they were going head to head for all these sites, right? And they were paying up. And then the recession came, and then these developers were stuck selling at cost. Like they were just trying to get out without losing all their money that they put in. I think when you look at development pipelines, I think you're going to see some of that right now. I just saw an article about the Atlanta industrial facility where these spec warehouses are coming online, and they don't have tenants. So a lot of people just thought this was going to go on and on and on, from the pandemic, right? So where are those spec warehouses coming online, right? Who do you have for a buyer? Who do you have for a tenant? So it's not one. It's a case by case. It's like you need to find the hole in the market or the pain in the market and try to create a relationship where you can create value. And I hate to say this, but find a way to insert yourself in the deal. Like you put the deal together. You orchestrate a deal, right? Because what you do is you know that this seller over here has got a short-term tenant who's going to move out, or maybe you have a place for that tenant to move into to one of your clients. And then maybe you have a developer who needs to sell because he needs to get liquid, and you got the right buyer. 1031 exchanges have been very slow. They've driven the price in. And I think that they're going to be in the driver's seat for the next 12 to 24 months, right? The run up on this market is I ran into so many 1031 exchange buyers that said, I'm just going to pay the taxes or I'm not going to sell because I don't want to buy back into a market that I'm selling out. Right? It just doesn't make sense. So, I don't know if I answered that directly enough, but I just find myself, I look for those opportunities. That's what really excites me about the business. And candidly, they're hard to find right now. It's not an easy time out there for us. I mean, you got a good relationship. God bless you. Keep with it, and don't ever underestimate that someone can't come in the back door and steal that from you.
Hey, that's real talk. It's real talk. I think when there's abundance, there's a lot less headbutting. There's plenty of money to go around, but
Yeah.
we're starting to see, you're going to start seeing people's true colors within the industry, unfortunately. And
Yeah.
that's one thing I love about our company here is I feel like we're all very, supportive and helpful, and we do have a very amazing culture here internally. But unfortunately, I do think there's going to be a lot of dog eat dog out there for the next little while. And it's going to, I always tell people on my team, like, look, this is when it actually counts, whatever you're doing. If you really based your career off of what's been happening, then, that's not probably a very good metric of how you're performing long term. So I love to talk about that. And I think too, when we talk about challenges in the industry, what are some of the biggest risk factors going into this next cycle when you're talking about 1031s? Like, what are some of the things that people need to be aware of and look out for, or common pitfalls of trying to work through these types of transactions? What do you see happen often that screws people over when things start to turn like this?
Well, there's going to be some there's going to be some new history written out there in the drugstore net lease, in particular, Rite Aid. The playbook was all these deals are created equal. The credit's equal, the real estate's equal, and unfortunately, I think there's going to be some smaller mom and pop type 1031 investors that traded into it from an active maybe multifamily deal to this net lease deal, and they're going to have a dark building and they might have debt on it, and they might not be able to replace the tenant at the rent that they currently are being paid. So I'm where there's pain, there's opportunity. So I'm specifically referencing that, and I'm looking at it because you can come in and try and create the solution. I think the exact same thing, characteristics can happen in the industrial space. And so this comes back to, as an advisor or broker, really understand the whole site selection process. And you asked about credit underwriting. It's the thing is, since we're quote independent contractors, you might not be in a big office. You get kind of paralyzed because you don't know how to analyze some of this stuff. And I would say that you're not unusual for that. It's about trying to find other people that are experts that you can feel comfortable asking for guidance, or how do you underwrite this, or what do you tell me about this road corridor or whatever it might be specific to your industrial. What are the power requirements? I mean, like, you have all these metrics that are your experts at, that are they're the same things, is that you need to answer these questions for your clients, zone and things like that. So, going back to the great financial recession, I don't know how many people here were in business then, but when the tide went out, there were a lot of people standing naked, right? That's the old saying. And I was like, oh, what am I going to do here? So I'll be honest with you, I signed up for a coach. I took a year-long coaching program. So you can always do something to work and hone your craft. You know, if business is slow, you should be studying. I'm not going to say go get a side hustle, but if you need to do that, do that. But practice, study, you know, work on your craft and, you know, go into the field. And there's no, people love when, you know, maybe not in the old days when you had 1,000 brokers calling you, but be different. Go into the field and, you know, find these owners, these landlords, these tenants, and ask questions. What's going on? What can I help you with? You know,
Right.
everybody has issues out there, whether they tell you the truth or not.
That's very, very true. Yeah, and I think too, you know, one thing that I really want to encourage everybody on this call to use is each other. And I think, you know, to your point, you talked about asking questions if you on site selection, for example. I'll tell you one of the best things that I have is I have a few developers that I can jump on a call with, sit down with GIS. Hey, tell me your thoughts on this. And in beginning, before I really understood what developers are looking for, it was literally, hey, I got a piece of land. You might be interested in it, you know. And what would happen is, right, they would ask me a bajillion questions that I
Yep.
didn't know the answer to, right? And then, you know, I'm going back to try to find this, that, and the other. But now it has gotten to the point where there are people within our company, within these council, these committees, there you may have a client or you're a broker that you're working with, may have a client or a contact. They are always happy to jump on and spend 5-10 minutes checking out a site that you may have for an industrial development, asking a set of questions. And every time you do it, you're going to get better at it and you're going to know more of what they're looking for. And not in a very short period of time, you're going to really understand a bulk of what you need to have answered before you take it to the developers or to these tenants looking at these sites. And that's what's going to really start setting you apart is when you've done the analysis. You're not asking them to look at a potential piece of property that the seller may sell, and then instead you bring them hey, here's a site, here's a one-page summary of everything you need to know. I've got a fee agreement. No, you don't have to pay me. I've already, you know, they're asking X. I think you can get it for X. What do you think? That is that's the type of thing Mike's talking about as you hone on your craft and you can become proficient at these types of things. That's what's really set you apart in this next cycle, right? Because I think before it was just, you know, I think the rope has been so long where there's been you know, just it's not been the craft of brokerage. I don't want to get on a tangent, but like you said, Mike, there's not been craft. I think it's just been, you know, just free for all. Here's a deal, buy it, whatever. The comps.
Yeah.
There was no craft involved, and so I really like what you said there. And if anything, if you're not in a position where you're slammed with deals, you know, you can be if you work hard. But if you're not, the alternative is always yes, work on your
Yeah.
craft, and that's going to set you up for years to come. You know, so I really like that you said that.
Yeah, no, I think, you know, for me being in retail was ICSC was kind of the student body, you know, the International Council of Shopping Centers, which they changed their name. I don't even remember what they call it now, but industrial is SIOR and NAOP and things like that. And those are great places to lean into right now. Because, you know, like there's a lot of guys and ladies, you know, that are seasoned veterans that, you know, they know what it's like. They've been through it. And so if you're not at a point in your career that you want to try and help and give back, you know, so those are areas that I strongly believe in, you know, CCIM. I know, Pamela, you're a CCIM, correct? Right. So,
Yes.
you know, organizations like that. And I think that's one of the most beautiful things here at eXp is that you have that, you know, at your fingertips, like no other place that I've ever worked. It's pretty unique. Where, you know, there shouldn't be any guilt or shame in trying to ask people questions. You know, when I came up through the business, man, it was a dog eat dog world. You know, your own brokers would cut your knees off, you know, if you went in their turn. I'd be like, what? So, you know, thankfully it's not like that for the most part. And if there are still people out there like that, well, they're probably pretty isolated in this market.
Yeah, and that's
Hmm.
100% why we're here. Amen. You know, that's why
Yeah.
eXp Commercial went to such great lengths to find experts in different asset classes and type and investment strategies, for lack of better terms, to come together so that we can be a resource to other agents within this company, the 89,000 agents strong in this company that are
Yep.
practicing real estate, because there is no shame in asking questions. The worst thing is, know if you're getting into a lane that you're not familiar with, know that you don't know what you don't know.
Right.
It's a really great way of putting it, right? You just don't know what you don't know. So we're here to be a resource to you. Ask us the hard questions so that you can be better equipped and have a better chance at actually transacting and earning a commission and being of value to your client.
Yeah, totally. I believe it's, the phrase that I like to use is, the who's not how. Like, I used to try and figure out how to do everything, and it was inertia. Half the time I didn't get things done. It's like, no, who are the people that are smarter than me, that are in there, in the industrial lane or the medical office lane that I can tap into, right? And so even more so today than ever in my career, that's how my mindset is. It's about leverage. It's like, and I'm not talking money leverage, I'm talking about human capital leverage. There's just so much out here that you can tap into. So just don't be shy.
I love that. So, in wrapping this up, so we can get out to our audience and see if we've got any Q&A for Mike. What do you think, Jabin? One question to summarize our content here today?
You know, we could go on forever about it, but so triple net investors, who's who's buying? Who are some contacts to reach out to? Um, yeah, I want to know, like, if you're buying investment real estate right now in the industrial space, what are you looking for? Where's your head at for the next couple of years? If you're going to bring a 1031 buyer to an industrial deal, what does it look like? What are we looking for? Give us your thoughts.
Yeah. So, well, there's a couple things. One is industrial has become when you think about the REIT sector and the institutional side of the business, right? That's public markets where you're buying stock in Prologis or or some other big developer, right? So they're a different kind of species as far as the types of deals they're buying and developing. Like you can get into, and I can tell you for certain. I know many brokers that started working with obviously I'm talking retail, but I know it happens in every asset class. They're a good broker for a company, and before you know it, they're a real estate manager for that company. Right. So you don't always have to be stuck on the broker side if you don't want to. But they so you get it because these deals are bigger and chunkier. Most of the institutional cap, it's hard to compete against those players because they're not typically 1031, but they can stroke a check. And so what's a seller or developer wants? They want certainty, right? And they want a capital source maybe to help them go do other deals. You get into what I consider, and I would say industrial is probably more like 5 to 10 to 15, 20 million deal range. That could be, 50,000 square feet up to 200,000 square feet, right? And it really depends on the size of their exchange. Are they looking to go into one or two or three different assets or just one chunk? So if you're going one and you're going all in, you need to really underwrite this correctly. And so when you look at pro formas the last few years, their exit cap rates just make you scratch your head because they just underwrote it that there's going to be continual appreciation, right? Because of this low interest rate environment. So now you got to look at debt, LTV is probably 50, 60%, maybe a little more if you've got the perfect deal. So you need more equity to go into. And now because, your debt is, you're in, probably 6.5, 7%, maybe even higher when credit, you can push that. But if it's non-credit, you're going to be buying deals at like an 8 cap, 9 cap, 10 cap, right? And you really need to understand that on a NOI, how durable that is. It's about cash flow. How durable is that? How tight is your lease? How good is the real estate? What was the cost to build? What are the market rents? And I would say, industrials, even though I just said that, all these spec deals could be some problems, with the onshoring and manufacturing, the Inflation Reduction Act, still the growth of e-commerce. I just think it's a very, very strong market, right? Then you can get down to smaller deals. Could be your landscape company. We're not even getting into sale leasebacks, which is a pretty big segment. Um, so, let's just, you got to really understand your buyer, what their 1031 exchange hold period is and what their risk is. And then you need to be the expert in your own market. Like you need to believe in this real estate. You need to understand the credit of that tenant. Like, what do they do? Who are their customers? Who are they shipping their product to? And then God forbid something happens to them. How do you backfill that? So, it's an art and a science. You need to understand the numbers and how to underwrite, but you also need to understand those macroeconomics of the market.
I love it, Mike. You totally
Beautiful.
summed the whole entire thing up in 3 words. It's about cash flow.
Yeah. Yeah.
It is about cash flow, your
Right.
triple net lease investments. It is 100% about cash flow and protecting your client that way. Before we open up for Q&A from the audience, I want to do something really quick because you are a very high level agent and there was some vernacular thrown out there that I want to make sure everybody understands. So if we could do a quick definition on some terms that I heard, and I mean like super quick, gap analysis. What do you mean?
Yeah. Well, where's the hole in the market? Right. You could call it a SWOT analysis. It's just if we'll go back to UPS, DLC, and FedEx, maybe only 2 or 3 are there. How are you gonna use your maps, your data, your data gathering, your aerials, all that to try to identify where a potential hole could be in the market, and is there a site that makes sense? So that's kind of the broad definition for
Love
me.
it. And a local Las Vegas example, and I talk about this one all the time, is the fact that when in the industrial sector in Las Vegas started expanding exponentially, we decided to start building on the south end of Las Vegas because it's closer to LA. Why is that important? Because truckers are only allowed behind the wheels so many hours a day. And so by building on that side of the city, instead of making them drive through the city as our population grows and traffic expands, they're able to do 1 day turnarounds. That was a huge gap analysis. We discovered that we could save trucking companies money, we could save time. And that was a great example of that. Credit tenant. Don't they all have credit? Good credit, bad credit? I don't know. What's a credit
I, I want to go back to your point because I touched on this earlier. Is like how the market has shifted, right? You're essentially kind of creating a new market that 10 years ago people would have just probably poo-pooed you, right? So now
Absolutely.
everything is shifted over there, right? And you own something and it's got a shorter term lease. It might be hard to get out of or extend the lease with a tenant. So that's just a good point that you brought up. Credit tenant, at the end of the day, that's an investment grade term, where it's 99% of the time it's a public company, but not always. And so this is where you can get really technical when you use the analytic companies like Moody's, or there's a variety of other companies out there that actually track these companies. They give them an investment grade, right? A, B, C, D. Investment grade is typically triple B or better. And so when you get into real estate terms, you think of what they like to call a bond wrapped in real estate. So you really you're buying the credit, the debt of that company, and it's been graded by an analytical firms like Moody's, and so that impacts the pricing in the marketplace, and it's usually measured as a delta above the 10-year treasury. So I'm not an instructor, but I know enough about like what it means in layman's term.
Love it. I got one more for you. Dry powder. What are we? We going shooting tomorrow?
Yeah, man, let's go. That's a catchphrase that you always hear, especially with the, it's more of an institutional phrase, and that just means they've got a ton of capital in their war chest. They go out and, these public funds, they raise capital, and sometimes it's discretionary, sometimes it's open funded, closed funded, meaning, that's just the fund that it's in and their discretion of how they're going to deploy it. So what you hear now is that it's the where everything's going is that people are looking to buy the debt because they believe they can buy the debt better than they can buy the real estate, and they can get to the real estate if there's a problem. So it's just really dry powder is money that's in a pool waiting to be deployed.
And I love that you mentioned that too. And here's just a little tip for anybody who has access to CoStar out there is that if you've got a property, if you're aware of a property and you have figured out its highest and best use, and that's industrial, because for the sake of this conversation, you can actually go into CoStar and you could search funds that buy industrial, and then you can narrow it down to funds that are actually raising money, deploying money. If that fund is closed, you obviously wouldn't want to go after that fund. So there's just so many tips and tricks in this market.
Mm.
So dry powder, awesome. Thank you. And then, I'm just going to say one of the biggest tips of the day is Google searches. Keep yourself educated. I love that you brought that to the table. Go out there and set some Google searches on what you want to learn more about, honing your craft. And the most important thing is that it's always about the cash flow in triple net leasing. And guys, fortunes are made in down markets. So, I'm honestly and frankly, I'm tired of the heyday. I'm over it. I am 100% over it. I like that there's a bit of a correction going on. I know that it's not pretty all the time. However, the truth of the matter is this is where we get to be of service. This is where we really get to be valuable to our clients. We can really dig in and find some great transactions, and you can support your communities and your neighborhoods by doing so as well. Great real estate agents will bring communities back in times of hardship. So to me, there's nothing negative going on in the world. It just is a market. We have lived through many markets in our lifetime, whether you are in the real estate game or not. This is just another market. And how do you navigate it? So I love hearing the positivity of that conversation. I especially love being involved with eXp Commercial during a transition. No better place to be. 89,000 other agents to collaborate with and make deals happen. This is when you get to be a rainmaker.
Totally agree. I like you. At the peak of the net lease market, I actually kind of got burnt out from it because I didn't grow up as a pure cap rate player, like a desk jockey. Yeah, this is a 3 cap, a 4 cap, or if you work with a seller, yeah, give me a 4 cap and I'll sell it, I went up through the cycle, I went down, and then it came back up, and I knew, at least, my humble opinion, that it was driven by cheap money. And that couldn't last forever. So this is what I've been waiting for is a shift. I don't know where it goes. I don't wish pain on anybody, but it's opportunity. And this is a chance for this company in particular to really, excel and make an impact out there.
Absolutely. So, Jabin, if you have nothing else, we can open it up for some Q&A.
Yeah, I've got a question.
Hi, Erica.
Hi, hi, I'm Erica from Montana. I want to talk about what you guys charge, what we get paid for these, what the industry standard is. I was pretty confused a few months back. Somebody in this group said, "Oh, it doesn't matter with leases about the portability. Just can go into any state with leases." I'm in a situation where I'm not getting paid on a lease. Jabin, you just said, "Oh yeah," or "No, I'm not going to charge you for this." So when do you get your buyer leaser representation signed? When do you upload it to SkySlope? I went to charge a national hotel development client, my usual on the buyer end, which is 5%. And he was like, no, we're doing the national standard of 3%. I said, fine, cool. Come build your hotel in Montana. Love it. But I went straight from no real estate experience into this. And I mean, I don't even like, I get corrected more often by clients and their lawyers on what standards for what I should charge is. And also, yeah, retainers, like how much do you do for free?
Well, so there's a lot of questions to unpack in there, a whole lot of questions. I don't even know if we have time to go through the whole entire thing here. So, as far as when you get people under a rep agreement, I think that that is between you and your client, right? There's clients that I have great relationships with, but I've been doing this for 36 years. If I'm harnessing a new relationship with a client, it's important to me to get them under rep agreement before I show them one property. You want to
Montana,
establish.
it's by law. In Montana, it's by law. Before you do anything, you have to get it signed.
Are you so in Nevada, we have what's called a duties owed, which explains fiduciary responsibilities. That is not that's simply a disclosure. So before we do anything in Nevada, you definitely have to get a duties owed signed, but that doesn't bleed over into any type of compensation agreement. And then you've got questions that are, I would say, like uh, just industry standard questions, which there is no industry standard for set commissions. I mean, there are averages that a lot of us are charging and getting paid. However, by law, there is no set commission.
Yeah,
That
I get that.
Yeah. And so, and every situation is different, right? In commercial real estate, we scale commissions a lot. It depends on the size of the deal. What's funny is if I transacted $50 million in real estate a year, a lot of residential agents will like to multiply that by 3% and believe that that's what I made. However, I know like a lot of commercial agents, like true commercial agents out there are grinning because commissions in commercial real estate transactions scale based on the size of the deal. The larger the deal, typically, the less percentage we're making. And that's all negotiable. And that is all up to you and your client. And then as far
Yeah, I've got a new 6.75 million listing and he wanted to go lower. But what about leases? I mean, I've got a industrial lease. I get leases all the time. I get clients on the hunt for leases that of course I would want under contract.
we again, depends on the size of the deal. We typically are pretty successful at getting 3% on our side. And again, a lot of times you're negotiating that with your client. You're not sure if you represent the tenant, you're not positive that the landlord is actually going to even offer anything. So, the commercial real estate world is the wild, wild west. Let's be honest. I mean, Michael, would you have any great advice for that? We're in control, and it's really the responsibility is up to us declaring with our client, whether that's on the landlord, the tenant, the buyer, the seller, whatever side, what we're going to be compensated. Um, Prior to any type of negotiations, in my humble opinion.
Yeah, I think what I would add is that, in a real hot, frothy market, fees always get compressed, meaning that they get small, they get skinny. Sometimes you're like, I'm creating more value, but it's driven by your client and industry standards. I think, and I don't do leasing, but you touched on it, Pamela, as far as the bigger deals. It could be, a fixed number. It might not be a percent, it could be 1 or 2%. It really depends. I see averages like on, let's say, 1 million to 2 million, 5 to 6%, sometimes, 5 direct, 6% if there's a co-broke, because you're going to split the fee. Bigger deals, up to the 5 to 10 could be 3 to 4. At the end of the day, the markets are pretty efficient, and sellers realize that. So when you get a lot of other brokers that are trying to win the business, they're more than happy to undercut your fee, to be the low man on the pole, and try and do it on volume. So I've run into that a lot right now. Market shifting, so I think you can push your fees, but you got to create the value.
The other part of your question I will touch on just very briefly is I believe you're talking about license portability. So one of the great things about working for a cloud brokerage is that it is easier and less complicated to transact in other states. However, it's always a great idea before you step foot into that state, whether it's a turf state, a green state, a yellow state, whatever color state that is, it's always a really great idea to touch base with the DMV, establish relationship, and go from there. Because remember, you're licensed in one state and you're now operating in another. So although it's easier under the umbrella of eXp commercial, it's always a great idea to touch base with that DMV first. Understand their protocol. You might not have access to the disclosures in that state, even though you are allowed to operate in that state. So I would never do a transaction in another state without reaching straight out to that designated managing broker and understanding all the procedures and protocol, regardless of whether it was a green light or a turf state. And those are just procedural things within the company of eXp Commercial. We also have a note here in the chat from Blair. He says, Mike touched on SIOR and we spoke of working together. SIOR offers not only a great knowledge base, but also a society that works together. I believe anyone that wants to specialize in industrial office owes it to themselves to explore the organization. I couldn't agree more. I couldn't agree more. You know, I was 23 years old when I earned the CCIM designation, which was, I was the youngest person in the nation, but you know, you need to invest in yourself. These educations they don't come cheap. However, they reward themselves to you financially exponentially over the years. SIOR for industrial is one of the best vehicles, learning vehicles. It's the master's degree of industrial real estate. Would you say?
I don't know if he's still on there. You know what,
The pinnacle.
I'll add to that is that I'd like to leave this is that it's, especially if, you know, you're not producing and it's challenging out there, is when you look at SORI or CCIM, you think of it as an expense. You need to flip that around. It's an investment in yourself and in your career. And I guarantee you'll earn that return back tenfold, 100-fold over.
Yeah, ICSC was amazing too. I went last year in May.
Yes, yep. Yep.
Excellent. 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 Well, guys, we are 2 minutes past the time. It flew. And thank you to Mike for hopping on with us. I can't wait to get on one of your calls and learn some more about triple net leasing over there. And we just encourage you guys to jump on these and learn from each other and get involved and ask questions. And together, we are going to make it through this market and every market.
Yeah, thank you, Pamela and Jabin. I really appreciate the opportunity. Please consider me a resource and welcome you to come over to the net lease call. The next one's going to be about site selection. So there'll be some good takeaways there because it's, you know, on topic of what we talked about. Our last one was about 1031 exchanges, which is in the recording. So I love what you're doing here. I modeled our council after you guys, and so love to continue our conversations and cross-pollinate and network with everybody.
Wonderful. Thanks,
Let's do
everybody.
it.
Go today. Have an awesome Tuesday.
Let's make some money.
Peace.
See ya.